This is FinTech Insights, a series of conversations about the changing technology and payments innovations impacting the U.S. financial landscape. FinTech Insights is underwritten by the William Mills Agency. William Mills Agency, the nation's preeminent public relations and marketing firm for the financial industry. For more information, visit www.williammills.com.
Jerry, welcome to FinTech Insights.
Hi, Frank. How are you?
Well, I'm fine today. I'm going to start diving right into what I think is a pretty exciting and evolving subject, obviously retail banking, disruptive technologies, lots of changes in the atmosphere and the environment. Let's start there and give us a little oversight of what's been happening.
Sure. Well, you're absolutely right. It's a very exciting time right now, maybe in some cases for the wrong reasons and some for the right reasons. I think the entire economic collapse has had such an impact on retail banking from a couple of different perspectives. Obviously, from the regulatory perspective, all of the failures that took place pretty much globally, with a few exceptions, has forced governments to kind of step in again and try to impose regulations, try to suggest regulations, try to make the world's economy, I think, a little less dependent on individual institutions, or try to make institutions behave a little better going forward. So that's been a huge impact on retail banks everywhere. I think secondarily, the consumer feels a lot less trust these days, particularly with larger institutions. They see the larger institutions failing or being bailed out, and the executives from those institutions still walking off with bonuses. And so from a customer perspective, the trust has eroded quite a lot. And at the same time that this is happening, the technology innovation has been just amazing, particularly in terms of mobility and the social networks and all the data that's being generated in services moving to cloud-based. So you've got these three kinds of drivers. You've got regulations, you've got consumer attitude and consumer behaviors, and all this new technology. And that's kind of really thrown retail banking into kind of a spin.
You kind of got an oxymoron when you talk about trust and change at the same time, in terms of the trust being undermined to a degree based on the current situation and some of the events that are either controllable or uncontrollable as it relates to the consumer, and then in comes all of this new high technology.
Absolutely. And I'll tell you where it's hitting the hardest, I think, is in terms of the investments that the institutions are making or wanting to make.
Sure. Yeah.
So, in the absence of this high regulatory compliance issue, if that weren't there, I think the banks would be heavily investing right now in those brand new innovative technologies and being able to offer their consumers more and better products and more and better ways of handling their day-to-day finances. But now you've got the CFO at the institution saying to themselves, wait a minute, I've got to spend all of this money on regulatory compliance and risk management and everything else. How much is really left over to please this customer base that we know we've kind of lost in terms of trust? And that becomes a really, really fine balancing act for the institutions.
Before we move on from the subject at hand, let's talk from a high level about the regs and the ops in spending versus innovative spending. Maybe go into greater detail about that.
Sure, no, absolutely, and it comes at every level, right? So you've got risk and compliance, which is taking a brand new priority role, I guess you could say, in the institution. Not that the role has never been there before, but the focus on risk and compliance within the bank has gotten to be much more prominent. All of the regulations happening that require investments to make sure you comply, all of the deadlines, and that's really it's taking the focus away from innovative technologies, from delivering a better experience to the customer or from delivering better products to the customer. There's only a certain amount of limited time and money the bank has, and so when you're talking about having to spend more and more on regulatory compliance, it just means the customer loses out. And again, this is where the customer is least amenable, if you will, to losing out on the equation. The interesting thing here is that when you look at a large institution, the Bank of America, J.P. Morgan Chase, that size of an institution, versus your, up the street, for example, I bank with a $9 billion bank just up the road from where I live. Those banks were affected less, They didn't always have the best technology in the world, but they knew my name when I walked into the branch. And what you saw immediately after the economic crisis was that those institutions saw an increase in their deposits. People were fleeing the large institution, going for the smaller ones. And given that new technology innovation that we're talking about, that kind of technology is being made available to the smaller institutions at lower and lower prices, easier and easier to implement. And so you kind of wonder whether there's going to be a shift in customer loyalty away from the big banks and into the small ones. And again, because the big banks have to worry about regulatory compliance in their investments, whereas the small banks are giving the customer the experience that they're looking for.
Kind of a perfect storm in the worst sense in terms of all of the things they're having to address. I'm thinking in terms even of virtual banking and what would you call it, coinless or currency-less environments now where you've got banks that promote the fact that they have no physical presence.
Exactly. And this will be the second wave we've seen those, but I think this is the wave that we're going to actually see that happen. In the first wave of that branchless kind of bank, there was this sense from the consumer where they didn't trust those institutions because they couldn't reach out and touch them. Right? There were no branches they couldn't feel, and this was right around the beginning of online banking as a way of managing your finances. I think now with mobility is the one that kind of turns that key or turns that lock. Mobility is more accessible by more consumers than ever. The whole concept around downloading apps and being able to do things from your mobile device, particularly for the younger generations, is much more ingrained in the population today. And so banks that provide the same financial services as your neighborhood bank or as your national bank, but do it without branches, I think that's going to be much, much better accepted much more openly by folks who are used to the whole mobile experience.
Let's talk a little bit about from a cultural standpoint, and I'm talking now, you mentioned generational. Obviously, the dichotomy is pretty severe, I would guess, in terms of the relationship that the quote-unquote older generation has with banking in general, balancing financial responsibilities in the overall. But then the younger generation, as you mentioned, is all cloud, all app, all digital. Is that the case? Is it a clean cut like that, and how are the banks dealing with it?
Well, this is the interesting part. While the younger generation is much more amenable to using the mobile channel, let's say, that doesn't in any way, and I've seen a couple of surveys over the past couple of years. It doesn't mean in any way that they're willing to give up the old bank models either. I've seen 2 surveys over the last 2 years that have asked that question of, for example, the millennial generation, the Gen Yers, where they were asked to rank the importance of certain aspects of banking in terms of finding a new bank. So if you want to open up a relationship. And believe it or not, branches came in either second or third in many of these surveys. And this is the Gen Yers saying, we want to see branches, that's important to us. So yes, they're much more open to using mobility, but they're also looking for that physical presence as well. Now, then the question becomes, will they ever use the branch?
Well, I was going to say physical presence translating into consulting, into advice and direction. I'm thinking it certainly isn't just restricted to transaction.
No, definitely not transactions. I think you're absolutely right in terms of consulting, advising, selling. But I think there's also this aspect of the brand. I see you on the corner. I see you in my local neighborhood. And therefore, that gives me go back to the trust issue. It gives me that sense of trust. So yes, they're absolutely willing to use the mobile device, which is why I think the branchless banks have a better chance these days. Mm-hmm. But they're not necessarily willing to give up that location, that geo presence.
So in a decade, we'll probably see game rooms and Starbucks in the branch bank.
Absolutely. I think in terms of where branches are going, I think that's absolutely dead on right.
I'm being facetious, but
no, absolutely. I think we're going to see smaller branches, but possibly more of them. I don't see banks, particularly the large banks. I don't see them closing. I don't see them having a net negative effect on the number of branches. I think the branch model has to change, beginning with the branch size. We don't need branches with 10 or 15 teller spaces anymore.
Well, now, obviously, we're talking domestically. Let's maybe get a very broad perspective, 40,000-foot level, they often say in technology. Mm-hmm. What does the picture, or how does the picture change when you look at it globally?
Well, so if you're looking at, for example, Europe is still having economic issues that we're beginning to overcome here in North America. There's still a lot of issue with sovereign debt overseas. And so the banks are still facing the same kind of regulatory pressures and economic pressures perhaps more so than we're seeing here today. A very mature market, so I don't think branches net are going to increase or decrease anytime soon. Online is still very important. Mobile is very, very important. And if you're looking further down into the Middle East and Africa, I would argue that mobility becomes a key component of the infrastructure, unlike anywhere else in the world. And in fact, it's that way because they have to overcome these issues of not having the infrastructure in place. So I don't see a lot happening with branch necessarily in Europe. I think branch is going to be leapfrogged in Middle East and Africa in favor of mobile and online.
Kind of a funny paradox in the sense that the mobility came about because of the obvious infrastructure that was outlined because they didn't have the connectivity that they once had. They were using mobile and using cell phones long before I think we embraced it here in the North America.
Exactly, and I hate to date myself, but if you go back to the 1970s, Latin America used to have one of the best banking technology environments anywhere globally, and it was because of the hyperinflation that took place in the 70s. And so they had to build systems that could handle day-to-day fluctuations. I mean, stories about, if you wanted to buy something substantial, let's say a car, you actually had to look day to day and jump on the deal. The day, the interest rate was, at what you thought would be the lowest of the week.
So crisis becomes a mother of invention in many cases, I guess. Well, the show is FinTech Insights. Let's talk a little bit about FinTech specifically. One of the things that I know that you guys are heavily involved in is the FinTech 100 rankings. But let's talk about some of the stuff that's behind the scenes as far as that goes. And I'm talking now about the actual technology that's being provided to the financial industry. Give us some ideas as far as the trends that you're seeing in the vendor community.
Well, I think the biggest trend that we're going to be reporting about is consolidation in the industry. And we're seeing fewer players providing more and more technology solutions to financial services. That, along with the decreased appetite for building in-house solutions, even overseas. Even in Europe, which, Europe has always been traditionally a place where banks like Santander, for example, or Deutsche Bank had their own large teams of IT folks building their own solutions. And that still takes place today, but to a lesser extent. I see those players reaching out to third-party vendors more and more. Certainly here in North America, we're talking about 3 or 4 large companies that are providing a broader width of services to their clientele. And it's not the case that these companies are selling solutions to small institutions that can't build their own. They are now selling into much larger organizations. And so they're covering more of the field of solutions, everything from payments to online banking to core banking process to remote deposit capture, ATM services, and that's definitely a trend that we've been seeing over the last 5 years. Certainly, one of the best examples is around the security environment, where thanks to a lot of reports around ID theft, an entire security ecosystem, if you will, sprang up. And a lot of small vendors were offering solutions around security and dual authentication. And slowly over 5 years, all of those companies were acquired by the larger providers of financial services technologies. And you're going to see more and more of that, with folks like Oracle finally coming up with a decent strategy around banking, for example. FIS and Fiserv still leading the pack in terms of being able to provide that breadth of solutions for the market. And I think so you're going to see a lot of consolidation going on there, as well as these companies taking those same solutions overseas into Europe, into Asia.
I'm hearing a lot of trust, change, and technology seems to be the mix in terms of the perfect storm recipe. One of the things as you were talking, I was thinking to myself that the vernacular it's impossible to keep up with the evolution and change that goes on. FinTech, for example, is sort of like big data. I don't know that it was a word 5 years ago, and now all of a sudden it's an industry. As we come to a close in our discussion, cap it off with an idea. Give us some idea in terms of just how big is the FinTech industry, and let's talk worldwide and in North America.
And when you say how big, do you mean in terms of dollars or?
Well, some sense of perspective. I'm going to guess that would probably be the basic perspective would be dollars.
And in fact, if you look at these vendors, and if you look at the definition of what we call FinTech, and that applies to companies where a third of their more than a third of their revenue comes from financial services. Any of these companies you talk to serve markets where financial services, even when you're looking at the horizontal vendors, let's look at Microsoft or Cisco or folks like that, frankly, the majority of those revenues come from financial services. Mm-hmm. So it's a huge, huge number. It's been like that for a long time. It's going to continue to be like that. Financial services is one of the biggest markets in terms of the spending that takes place.
And obviously, I'm going to sense that, depending as you described regionally, it's a worldwide phenomenon, and North America is driven by its own cultural instincts and its own economics, and governmental regulations and some of the changes that you've discussed. So, but obviously, a hot topic, hot market, and one that again we use a lot of cliches and a lot of oxymorons and terms. And one of the things I'm thinking is, you can either say it's dynamic, or you could say it's dynamically fluid, or you could say it's exponential. Any one of those things would probably be true, but I'm thinking phantasmagoric, Jerry. I think it sounds pretty crazy. Well, listen, thank you for taking so much time out of your busy schedule. Really keen insights. I think a pretty precise, on-the-mark overview for our listening audience. Thank you for taking time to join us today on FinTech Insights.
Thank you for having me, Frank.